Hey everybody, it's Michael Andersen. We had tried to record the conference call at noon, and well, I should have got my 12-year-old to come because he's better at computers than me. So I'm going to re-record the call now. It's going to be basically the same thing that I did at 12, and we're going to send it out to everybody. I apologize. We did not realize that there was a cap on the number of people who could be on the call, and quite a few folks dialed in and got busy signals. Apologies there. This is crazy times, but we are recording this, and I'm going to go over everything that I just talked about on the official call at noon, and hopefully we'll get this out to you, by 1 or 2 this afternoon on Monday. But I did want to thank everyone who did join us at 12 and who tried to join us. We are looking out for your best interests here, not just financial, but otherwise. These are very, very interesting times. Obviously, everyone is talking about the coronavirus. I mean, what a tremendous change from just a month ago when it was kind of this thing going on in China to now. My kids are, home from school probably for the rest of the school year. Disney World is shut down. I went to the grocery store yesterday. The shelves were bare. It's absolutely stunning to me. But overall, the national effort seems to be to flatten the curve of the virus. I'm sure some of you had read or have read some of the same articles that I have about how governments are responding to this. And essentially, if the governments do nothing, we all led our lives as we normally would, a whole bunch of people would get really, really sick, like right away, and would overwhelm the medical system and would be kaput. So what they're trying to do is slow it down, have fewer people get infected all at once, keep it so where the medical system can handle it or hopefully handle it. And this is going to result in a longer duration of these weird times, but hopefully will result in more people being able to get the treatment that they need. Please just give your thoughts and prayers to everybody here who's been affected, especially those in the medical community who are just working around the clock. The overall effort here seems to be to lengthen the duration of the virus, but reduce the severity of it. In the call today, we're going to focus on the financial impact to you of all of this, not so much the medical side of the virus. I'm sure many of our clients are well more qualified than I am to speak to the medical side of it. But what we're doing is we're constantly monitoring the overall environment along with our money management partners. I was on the phone with our principal money manager partner yesterday on Sunday for several times for several hours, and talking about how this is going to impact us and impact you. First part I want to talk about is how we're going to approach client meetings with you at this time. We are not changing anything. The office is remaining fully opened. We will still be in touch with you every 90 days to schedule your reviews. It's just unless we need to see you in person, unless a document needs to be signed, we're going to try to veer to having more of these done over the telephone. But if we do need to see you, we do need to see you. We are further enhancing our cleaning procedures at work. In the Easton office, the primary office, we're going to be limiting in-person visits to the downstairs conference room. We're expanding our sanitation procedures. I got to tell you a little joke. About a week or so ago, when this was all breaking, I told the office staff, Lysol like crazy, keep it all sanitary. Well, they followed my advice too much, and we set off the gas sensor, and the fire department got called. So we're definitely serious about this. Office hours are not changing. We're going to be open from 9 until 5, just like we always have been. We are offering expanded hours when we need to see people. I'll talk about some of the opportunities that we can take advantage of right now. The upcoming seminars at the Green Hill Country Club in Salisbury are canceled. The upcoming Lunch and Learn in Easton is canceled. We will continue to monitor the overall environment, but right now it seems like we're still on the getting worse part of this virus, and we're following advice from government to limit our gatherings. I know some people on our call are going on the group cruise in July to Canada and New England. Royal Caribbean, the cruise line, has said if you're over the age of 70, you need to have a doctor's exam and note in order to be able to sail. Royal Caribbean, some of you know, has already stopped all sailings for the next month. We frankly are expecting the majority of our group cruisers to cancel. Some have already canceled. We recommend everyone cancel. My family is canceling. We are not going. The staff who I was bringing with me on the cruise to visit with all of you, they're canceling. They're not going. However, we cannot cancel your trip unless we hear proactively from you. So please email my wife, as you know, she's the travel agent, and let her know that you're going to cancel. The final payment date is April 16th. If you cancel before then, you get a full refund in cash. If you've already made final payment, our understanding is because we are still before the final payment date, you can still get your money back in cash. If you cancel after final payment, I believe the cruise line is giving a voucher for a future cruise or something like that. Again, we are recommending everyone cancel. Of course, if you still wish to go, I mean, that's up to you. But as of right now, we are canceling. Bus transportation to the port is canceled. The pre-cruise cruise that we were doing out of Suicide Bridge ahead of time is canceled. We have had a lot of people tell us, they like going on cruises. It's a lot of fun. So we're thinking of doing a replacement cruise out of either Fort Lauderdale or Miami in the wintertime to the Caribbean. I have no details, no information about that whatsoever, other than a lot of people have said, look, Canada's nice, New England is nice, but in January, St. Lucia is really nice. So we will see, but we have no further information at this time. We do have a major client appreciation event on June 6th at Layton's Chance Winery in Vienna, Maryland. This is still a go. I repeat, the June 6th client event is still a go. This year, you need to bring your own chairs. It's going to be kind of like, I don't want to say a Woodstock because people would probably, maybe bring some things to smoke if they shouldn't, but it's going to be a really fun event with live music throughout the day. We've got 7 or 8 food trucks coming, delicious wines. It's going to be just fantastic. If we end up having to change that, we will let you know. But as of right now, the Layton's Chance event is on June 6th. And the way I look at it is if you drink enough wine, it'll kill the virus, and we're in good shape. So I don't know. But let's talk about the markets here. I want to emphasize, we've had a lot of phone calls in about this, that we build portfolios for times like these. Again, we build portfolios for times like these. Obviously, we don't know or didn't know that the coronavirus was going to come about, but we do know that non-financial events spike and scare the market from time to time, and it creates volatility and fear. We build portfolios for times like these. Our overall goal is to capture 80% or more of any market upside and participate in no more than 50% of any market downside over a full market cycle. So we're not talking about day-to-day, week-to-week, month-to-month. We're talking about a full market cycle. And we use professional money managers who have many cycles of experience. You don't want to use someone who's only been doing this in good times or who's only been doing this in bad times. You want people who've been through volatility before. Now, the vast, vast majority of the Andersen Wealth Management clients are perfectly fine if you followed our age-based portfolio construction advice. Now, not everybody does that. Some people come into our office and they tell us, no, they want to be more heavily invested in the market. Well, if you've made that decision, you're probably not going to be fine. You've probably taken a beating and will continue to take a beating, but the vast majority of our clients are perfectly fine. We've been doing lots and lots of phone calls, and a lot of people understand that, we have built your portfolio for a time like this. Now, when the financial markets do get volatile, when they do have a decline, there's a psychology to this that I want to go through quickly. So when the markets first start to get cray-cray, we tend to see people dismiss it mentally. Oh, it's not a big deal. I'm not worried about it. They're dismissive. And then when it continues, people then become nervous, and then they get into denial. That's the stage we're in right now. We've gone from nervous into denial, where people are telling us, I'm not logging in and looking at my accounts. I'm not opening my statements. I don't want to know. I don't want to know. I don't want to know. That's the current stage of denial. The next stage is panic, where people are just running around, not sure what to do. And then comes hysteria. And the hysteria and the panic stage are very, very dangerous, because that's when people make emotional decisions. And emotion is your enemy here. Now, when the markets do start to go up, people start out a little bit skeptical. They tend to sit back and watch it for a while, and then they maybe test it a little bit. They look at it, they put a little bit of money in. Then they finally get in, and it's usually too late. They've missed out on a lot of the upside here. Please, 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 let us be your sounding board. You've got to remain unemotional. Remember, the markets, they aren't reactive. The markets are proactive. The financial markets are what's called forward-looking. They do today what they think is going to take place 3, 4, 5, 6 months from now. And judging from everything that's taking place right now with the extreme volatility, I think what I said earlier about coronavirus is what the market is interpreting, which is this is going to go on for a while. The key to getting through all of this is to remain unemotional. I mean, this is why you have us. We're not here to, shake a crystal ball and give you magical answers, but we're here to be unemotional. We're here to be a sounding board. This is why you have us. We utilize outside experts who have decades of experience. So we are not becoming emotional. This is why you have us. Now, I do want to talk about some of the models that many of you share, beginning with the Evo models. Evo, as many of you know, is a model in which the computer makes decisions to get in or get out of the market based on technical data. What happened last week was Evo was in for a couple of days, and then the stop loss was triggered, and Evo went 100% to cash. And all the carnage that you've seen for the last week and a half, Evo has successfully avoided. If you look at the last time we had a major crash, which was late '07 through early '09, Evo actually made money during that period. And it did so by getting out during periods of volatility, but then once a short-term trend happened, it jumped on it. I can't guarantee that'll happen again, but I'm hopeful that it will because Evo was designed for times like this. Another one of our model that many of you have right now is the AWM 50, which is 50 dividend-paying stocks, high-quality blue-chip companies. They pay and raise a dividend every year. They have products with largely inelastic demand. These are the stocks you want to be buying right now. This is the model you want to pour money into right now. So I got to tell you, as I did the conference call, I had a Diet Coke sitting next to me. Well, guess what? I don't care whether there's coronavirus or not. I'm going to go to the store and buy more Diet Coke just like everybody else. Or, I'm going to, when I need a new computer, buy a new IBM computer. When I go and get gas, I'm going to go to the Exxon gas station. These are companies who are built for tough times, and I would encourage you, if you're looking for an opportunity, to use our AWM 50 model. Now, another model that many of you are using that is a more conservative model is the high yield model. There have been some changes to this as we've gotten some sell signals on some of the mutual funds in the models. The model is currently around 40% cash. We are looking at expanding our involvement in the mortgage repayment mutual fund. There may be some opportunities there to pick up a 5 or 5.5% yield. But again, our money management partners are watching these, so you don't have to. We're trying to remain as unemotional as possible and look at just the facts. Moving on to the financial markets, as I'm sure you saw over the weekend, the Federal Reserve cut interest rates to zero. They announced, about 2 days ago, a $700 billion injection through quantitative easing. This is on top of several tens of billions of dollars in size injections through the repurchase agreement market. There's already talk. It's not even been 2 days. There's already talk of another round of quantitative easing. The government is talking about substantial and immediate tax relief. This is substantial to you in that we're looking at some of the biggest players, the Fed and the federal government, doing things to keep liquidity open. In 2008, liquidity dried up. If you remember, it was 12 years ago, but liquidity dried up. That's not going to happen this time. They're doing everything they can to smooth this out. We do expect continued volatility in the markets. They don't like that there's volatility. They don't like uncertainty. The risk of recession is rising. Recession is defined as 2 or more back-to-back quarters of negative economic growth, or in other words, economic contraction. JP Morgan came out on Friday or Saturday and said they expect the second and third quarters to be negative at an annualized basis of -3% and -2%, which would trigger recession. Maybe it happens, maybe it doesn't, I don't know. We are seeing a run on cash at the banks. There were some reports over the weekend of banks running out of $100 bills. I went to the supermarket yesterday because it's a mile from my house to cash in some scratch-off tickets, and they said they can only give me $20 in cash because they only had so little cash on hand, which wasn't a problem because you never win with scratch-offs, but that's another story. We are seeing supply chain disruption. So like I said, the grocery store is less than a mile from here, so it's kind of like my thing to go every day. And I noticed on Friday it was the busiest they'd ever seen it, but the shelves were stocked. On Saturday, the shelves were emptying out, and on Sundays, entire aisles were empty. And what was really concerning to me when I asked the cashier why the shelves were empty is she said something I didn't expect. See, I expected her to say everybody's panic buying, it'll be fine, we're going to restock overnight. That's what I expected. But what she said was, people are panic buying, we're getting our trucks in, but our trucks aren't arriving full. This is concerning. Now, on top of all of this, we have the oil price war. Those of you who didn't catch it 4 or 5 days ago, Saudi Arabia basically opened the spigot to huge amounts of oil flooding the system in punishment to Russia, who wanted to keep prices higher. The Saudis have virtually unlimited ability to do that. This is creating tremendous additional volatility on top of the coronavirus and everything else that's going on. Now, some of the long-term systems that we use looking 5, 10 years down the road remain very positive. I'm very confident that 9, 12 months from now, we're going to look back at this as a teachable moment. But for now, we do expect there to be more volatility. Now, some people are saying, what do I do with my cash in the bank? Or if I've sold, if I've gotten nervous, what am I going to do? What you need to be careful of is not having a plan to get back in. Now, I'm going to give you an opportunity here, and this opportunity is good probably for about 3 or 4 days, and then that's it. And here's what's happening. The Fed cut interest rates to 0 over the weekend. What's going to happen in lockstep is all fixed financial products are going to follow in cutting what they offer. So you're going to see mortgage rates come down. You're going to see CD rates come down. You're going to see fixed annuity rates come down. But there tends to be a little bit of a lag. I'm talking about days here, not weeks or months, but days where the financial products are still offering the old rates. If you're thinking of putting some money in a fixed product right now, you want to jump on the opportunity right now. This is how you play this market, because these higher rates, they're going to disappear. Things are going to harmonize with the Fed having slashed rates, and that means fixed products in just a couple of days are not going to be offering what they're offering right now. So again, this is the opportunity right now, and if you've got some money on the sidelines, you want to jump in and get a fixed rate that's protected, you want to do so now. You don't want to wait till Friday or next Monday or next Tuesday. Again, we build portfolios for times like these. Our goal is to capture at least 80% of the upside and participate in no more than 50% of the downside over a full market cycle. When successfully done over a full market cycle, it leads to outperformance of the market by about 35%. Our goal is to give you the highest rate of return with the least amount of risk, and we are here now to help you make unemotional decisions. There are opportunities out there, like I just mentioned, about fixed products. You want to grab them while you can, while they present themselves, because those opportunities are going to go away very, very soon. I thank you all for participating in this conference call. We normally do not share them out in recording because there's always some fear of, of me saying something that's not fully compliant with some law or regulation or something. But I think this is so important that we're going to share this one with you, and cross our fingers that I haven't said anything that causes the regulator to blow their gasket. But I do want to thank you all for participating. If you have questions, please call the office now. Light up those phones. We are here for you to make unemotional decisions and to help you with your money as we go through this very volatile time. So thank you very much, and look forward to speaking with you and visiting with you soon in the coming hours, days, and weeks.